Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
So in light of the events over the weekend, it could be a completely fizzled out bunch of big nothingness, right? And honestly, I don't care. I really hope it is, right? Because that way it brings up its craziness, right? But looking at what's going on, I don't know that I'm going to be trading on Monday either, all right? And some people say, well, trading Sunday and Monday, we can pause for news events. And I just think what happens with these G20 meetings is you have a tendency to get leaked out information over the next couple of days on anything, right? So between the core CPI on Tuesday and certainly the press conference out of Canada on any monetary policy reports, remember, a lot of these CAD pairs, CAD GBP, and a bunch of the other ones that we'll look at today, a lot of these have had some pretty crazy moves. This could certainly add fuel to that fire. Plus Chairman Powell testifies, all coming up on essentially Wednesday's the big day for all of this. So just remember that's July 14th. As we roll through the week here, week starting on the 11th, this is the day that all the big stuff's coming. I'm not going to be trading this day, which is 12, so 14. I mean, hell, you can certainly make the argument that you probably shouldn't trade from last Thursday night all the way through this Wednesday, right? I'm not going to tell you to not make money. Just understand that you have been warned. So that being said, any questions, you can post them in the Q&A window. Chat. Let's take a look at the markets first. I'm going to get too much into that. Thank you for that social panels post, by the way. Over put that in, so great stuff. Make sure at the very least you are subscribed to me, your developer. Essentially, the software developer runs their weekly calls, and Auvoria's Prime corporate channel. You can always turn all the notations and indications off if you don't want your smartphone or whatever device dinging away with posts, which could be rather annoying. So DXY, not much has changed from Tuesday's chat. We've lifted up. This is a daily chart. We've lifted up out of a smaller little base range here. Note both the orange lines that have formed over the last couple of months and weeks to show the strength potentially of a floor we may not be able to get through. I still disagree with that. And I'm not the only person out there. There's a few of us on that island out there right now, because a lot of people expect the dollar to rally if we continue to see inflation fears press through the markets. So with that kind of being said, just understanding DXY, let's take a quick peek at FinViz. So this is the futures market. So I click on futures and then I click on charts. So we had a big reversal in equities on Friday from what was thought to be a big correction entering on Thursday. But I'm more concerned about, what do metals do, right? We've lifted off a pretty crushing move to begin the month of July for many of them and end the month of June. Looks like we're headed down with a lot of basics as far as farming. Do note lumber continuing to dive, right? Bonds, let me double check this is a daily chart. Yeah, daily chart. Notice in the lift, this is that inflationary stuff that's sort of peeking its head here, unfortunately. But Dollar stronger just in the last month from a confirmed downtrend to a confirmed uptrend. And now it doesn't look like we're just treading water and balancing here, auctioning between smaller range, which we certainly could. We're auctioning this range tightly for a while and then coil to burst one way or the other. But dollar stronger, euro, yen, pound, albeit Friday, a little bit of a break of the trend here. I don't know if you noticed that. We'll talk about that. But most of them have been a confirmed downtrend with recent pops just recently. And a lot of that was due to the dollar's decline. You had some more protracted moves in Swissy and the pound. So with that being said, let's jump back over. I've rearranged a few things here and there. For those of you that have been following along each week, I've added a number of indicators. I'm trying very much so to get these charts looking like my other systems. I'll just delete some of this stuff so we can see it better. So with chart here on the left-hand side, this is a market profile, but it's based on volume. So instead of a time-based, it's a volume-based profile. This chart's on a vertical, I don't know, bell curve, if you will, the aggregated volume that's trading at every given price level. So you can see that we're at the center point of, and this just shows the data that's in the screen essentially from August of last year. If we get rid of that, which I don't really think I would do, but you can look at it from two perspectives of just the data from 2021, right? This was also the point of control, which is a red line, is also looked like top part of the neck. That's interesting. Actually just caught that. And then if we jump back to what I prefer to see is all of the data when in a given range. So if we broke up into a newer range in any currency or any asset that you're trading, I want to see the whole data. I want to see what all the volume has looked like in this entire range that we've been, this whole upper range of the euro's rally off the dollar's decline, right? So, and this just helps give us more data, but essentially the no surprise that 70%, which is where this dotted line is right here at the 1688-ish area, is right at the bottom of value. So the darker blue denotes 70% of the volume, and this is often considered as what's called value area low to value area high. These are nothing more than just additional types of support and resistance points in addition to just the price action, because they just measure volume, okay? This is a tool that many institutional trading desks, including yours truly, along with order flow, we use to trade a lot of different asset classes. Not as much so in Forex, because I don't know, it seems like I've done probably way too much bitching about the quality of volume data coming in this case from FXCM. Call me a skeptic. Ye of little faith until proven otherwise. But if we're just looking at the data, what this is telling us from a euro perspective, we can overlay all of this, including moving averages, support and resistance, and it's going to help us really understand in the flow. And a lot of what a lot of the coaches and some of our new coaches are going to be taught is in more of a consistent theme that at least I would want to see in terms of the teachings of technical analysis. It's not that difficult of a concept, although it may look like it is. Follow along enough, listen to me drone on in many of these weekly calls. You will begin to get at least a good basic feel for it. You can do a deeper dive into this off of all of the technical analysis stuff, including a big time book that I posted on Telegram. Pound. So the dollar's rally off of its low. Let me just, I only want to see the data from when we got up into this area. Okay. Yeah, that looks good. Begins to put it more into perspective. See how that point of control line jumped to the top of where a value area is supposed to be a value area high. And it's really been a point or a sort of line of contention in this movement as almost a center line through the movement. Sometimes it's stopped it, sometimes it's added in, sometimes it's run together with some of the moving averages, um, so forth. But, I mean, ideally, this whole 3687-ish area is going to be support and obviously resistance up here, which is a newly formed yellow line from a daily chart perspective at this 4178 area. And again, everything I've talked about in terms of just prognostications on different levels could be dead wrong, with the simple fact that some Fed governor or some central banker comes out with a strong case that he or she is making for any kind of continued inflation in any form, right? Could absolutely send the dollar screaming higher and damn near every other pair that is matched with a lower. So just understand that. Well, I think it's critical that these red folder events be top of mind. But you can see kind of what's going on here. Let's jump over to US dollar Canadian, just the big picture chart right here in terms of this whole move. But if we look at just this year, right around 2021, you can see how this whole 2700-ish area has held. Probably continue to be, because it almost coincides with the 200-day line here, the red, almost getting an area. It's a little zone up here, I would think. There's some pretty big resistance from an upside standpoint. Again, could be completely wrong if the dollar decides to continue to rip, right? But longer term, we're in a downtrend, obviously, on most of the US dollar stuff long term. Short term, it'll just be right here. That's scale. We're in an uptrend. That's because the dollar's been rallying for many days since the bottom, which I guess was arguably somewhere in this zone here, right? Right around June, about the 10th of June. Notice how the value area low of volume has been support at this 2300-ish area. So just keep an eye on that if you have these indicators. Also posted some additional indicators because Hassan and I have sort of gotten together, and he's put a really great effort into building some good indicators that in many cases, especially this empirical suite at the bottom, which is in this bottom block down here, which is an aggregate of like 11 different indicators, including ATR, RSI, and a whole bunch of other stuff. And these things have been really solid in their ability to see changes in trend and strength of rallies. I'll explain this at some other point, but I won't be able to do justice in a decent explanation of this. It's just best to go into TradingView if you have the software and see Hassan's explanation of this. He also has a link to all of this in his channel post as well. So I'll touch briefly on USJ, still balancing large area. Our center line at this 108 spot 84 area is like it's pretty much been holding this, but we've also got some pretty decent confluence coming into this as well. Us versus the Swiss, again, same thing, big drop in relation to DXY. You know what you can do always if you're just looking at the dollar index, you can always just continue to toggle between the two. You can split screens in TradingView. I just don't like the look, quite frankly, because I like to see the whole thing. That's why I've got I have 6 monitors that flank this whole area and a whole bunch of the others on the other side of the office because I want to see it like in a big picture. So I prefer to have like a 24-inch screen for just a single chart. Puts it in perspective. I know a lot of traders, because I got a question on this the other day. Once everything's completely finished, I don't know that I'll ever be the case, right? But once everything's completely finished with my new office in Orlando, where I'll be broadcasting from whenever the hell we can find a damn house down there, I'll go through my entire trading system with you guys. So I'm actually going to be buying 2 big 49 curve screens, and I'm setting up an entire Corsair system to be able to be in the office, and then I'll have this system in my home office. So my 2 Orlando offices, I'll be able to show you guys a little more how all the trading set up, because I got a lot of questions on how that all works, but that setup's going to be a lot bigger than this one. Maybe I'll have a couple of 42-inch screens on the wall. I know that's been a popular thing among traders. They'll buy the 42s and then instead of setting them horizontally, they'll put them vertically. That allows them to see the price ladders that they trade, which is actually a real smart way to do it. The problem is you just need a massive desk or a whole bunch of hookups on the wall to hook up basically, HD TVs to your trading system. It's pretty crazy. I may do something like that, but we'll see. I prefer to look at it horizontally than vertically. So it's just a preference. I'd rather have a lot of screens this way, or maybe even a row on top like I used to have. So let's go into the AUD. So we've been in a long basing period here, which has been almost a half a year. You can see where we started in January. There's not a lot. We've finally been below that, but not by much. We very easily could go back up in that if Aussie continues to be strong longer term, and dollar continues to be weaker. But for now, we're right on the edge. Just keep this in mind. If you're just looking at the data from this movement up, typically when you see the point of control or the aggregate of volume jump to the higher of these different candles and looking at the sort of lining the top from a price action standpoint, this usually is a bearish signal from a volume perspective because it's jumped to the top. And it doesn't necessarily preclude any kind of sell-off, but I would just be aware of that. Bigger move we saw on the Swiss in relation to CAD. I think a lot of that just stems from a coiling, if you will, on that. One thing to note, though, is that if accurate, right, I seem to never be a believer in volume data with this, but volume wasn't as high in the sell-off that I would have thought. And you can see where it was actually really high right here. Now, obviously, there was a lot of events that have gone on in relation to the beginning of July that were more inflation-based and central bankers speaking out of tongue or out of turn, I should say, or out of notes that they've been given and sort of dissenting from the crowd, right? I see inflation. But I think this area probably should hold. CAD JPY. I'm going to go into this too much. Here's the chart. You want to see recent data in terms of market profile. And the volume profile here. Let's see if I can stretch this out to view. Kind of same thing I was talking about in a previous chart. Center line of volume in the aggregate is executed right around this whole 90.25 area. Notice how that is almost perfectly capped the resistance line. I'm sorry, I should say the yellow line of resistance here, and then the red line of volume based. This is algorithm based resistance based on candle and price action, and then volume based only. Euro GBP, same thing. Real solid area. If we just cover the data from this whole move, actually all the data of this move. See how this red line's not changing much as we bring. And by the way, for the question I just got on this is just volume profile at the what they call the range of viewable range. So it'll look at the entire viewable range and aggregate and put in a composite the total amount of volume. All right, let's see, Euro CAD, same thing, peaked above it, was a pretty solid resistance point, came right back down under it. You know, many of these charts look similar. You can just flip them upside down. Let's see, just some of these questions. I think I've answered most of these. Did I cover GBP CAD? Since we're on the subject of NEO, this is pound Canadian relationship here. I think interesting of note, we've had 3 wicks above this resistance line. I'm pretty sure NEO took all of these shorts, right? If I'm not mistaken. I think we took all 3 of these peekaboos above these lines as shorts, and now we're back down under, at least for closing just under this area. This is a hard one to forecast because there's a lot of other things that need to fall in place first. This is what I call a pin action. So you need to kind of know what the center pin and the 2 pins behind it, just like a bowling alley pin, is going on before you get to this level, which in my opinion is a more tertiary level. 2 or 3 pin rows back. Aussie CAD for the question I just got. This is the daily. If we're just looking at the data from, we're way below on the longer term chart. We're way below the value area low from the whole last year data. Is what we're looking at here. Let's see. Not sure. So regardless of the technical analysis I do on any of these currencies, the real key thing to keep in mind is that you just want to begin to understand this and see what's going on and with relation to it. But ideally, one of the most important things to be able to conceptualize is kind of how I run through these charts. It's going to help a lot, especially if you have MAV versions of the software where you're accepting trades from, a NEO or a gearbox, or a variable, right? You've got to kind of have an idea of the great algos that many of these software and the continuing ironing out of any issues, especially with that big release coming up of variable, which should be pretty cool. The real key is if you understand these chart patterns, and it doesn't necessarily have to be a deep dive. You can stick just as I do with the big picture, and it's just daily charts. You're going to know whether to accept the trades or not. It doesn't necessarily mean you're going to be right, but if you're up against a big, cliff that it's just gone off of, right, in any currency, you're not as interested in accepting, unless it got, really outside of a stretched move down. But the first breaks lower of a pattern like this on a daily chart is an example. I don't want to be stepping in buying any of this because it's breaking lower, right? I mean, it hasn't done it yet, but just imagine us getting underneath this level here. We test up against, and maybe this red line turns orange, right? Which just means it's that much stronger of a floor or ceiling. We come back up against it again. We can't get above it. We're going down. I just don't want to be long when that train's leaving the station. I'd rather ride a short down for a while, at least until it would get stretched out. And that's where these Bollinger Bands come into play. So I actually got very lucky with a gentleman who's I consider a way better trader than mine. I'm trying to become a little tighter with, but he built this Bollinger's, and I mean, anything that I show, it's crazy. Anything that I show, in terms of a really ridiculous move, and we can even put this on like a GBP NZD chart. It is just ridden these bands in some cases, and very rarely ever breaches these bands. You know. Now notice the bands are coiling just like we're coiling for some probably protracted move, like we're going to see probably in a bunch of currencies. Who knows? It could be Monday or Tuesday if there's some craziness coming out of these G20 meetings, right? So just understand how all this can just benefit you from a manual trading perspective, even though I still continue to see excellent products coming out from more of a fully automated standpoint as any kind of expert or algo based MT4 platform. We're going to be introducing a big one at the end of July, which I'm part of the beta group. The thing has done absolutely fantastic. But I still think it behooves everybody to not just let the software trade for you. I never, ever recommend to anybody the set it and forget it. So if you do hear that in your up or down line, I mean, I think you quite frankly should just stop and just slap whoever is doing that, because it is bad advice, right? It's some of the worst you can give, because it puts a false sense of security that, hey, I got the greatest algos, sliced bread. I don't have to watch anything. I don't have to maintain anything. Even the biggest hedge funds on this planet, right? Shops like Citadel, I know they're like the bad guys these days, but shops like Persian Square and all the other high frequency funds out there, they have teams of developers that just watch this stuff all day, and they're constantly tweaking the algo, right? So if the biggest guys in the world aren't sitting back, drinking bottles of champagne while they make billions of dollars, why should we? You always got to be on top of this stuff. So actually, let's just see this thing on GBP NZD on the daily. Look at that. I mean, just perfectly riding the band at the upper. And by the way, when we're riding these bands, I talk about stepping in front of the freight train a lot, right? And I just don't like to do it. This is a place where you can, because we're really getting stretched, due for a snapback, right? And there's other factors that may be lining up on there. You're not just blindly taking a trade because it's touching the top of the Bollinger Band, but this is telling you that we're getting wicked stretched. And at some point, it's going to snap back. Mean reverting type of asset. Many assets that I trade are mean reverting, so forth. For the question I just got on gold, here's spot with all the indicators on the chart. Just do the whole shebang here. So this is the entire move of gold up here. I don't know the data. Look at the support that center line has brought. It's great stuff. The more you guys look at this, more you'll be like, oh my God, I cannot do without volume profile. 1728 from a point of control standpoint over the last year. Again, look at these bands again. It's bananas how accurate these bitches are. Look at that. I'll just ride in the upper wave with this thing. It's just great. So that's gold. Shorter term, just looking at just this year's data. Let's look at 2021 here. I think you need to look at more data, obviously, but look how well that center line has been holding us as far as trading patterns. Touch and see the breach of the bands. Bands obviously expanded out because we're going down, and then we stayed inside. A lot of stuff you can glean from all of this new information I'm putting on the screen. Let's take a look at some crypto. All right, so here's the Bitcoiner. The whole data from, actually that doesn't matter. I don't care about that. I don't care about it a lot lower. I only care about the movements in these candles and the volume associated with them inside of the range that we're in, right? So let's stretch this out. Notice how, which would have been a tradable, Notice that this is the first time in quite some time that we actually absolutely blasted through. So you can see this here. Blasted. This is on the 19th of May. We absolutely blasted through the lower band. You know, could have been a tradable buy on this bottom. But eventually I'm pretty sure it's going to break lower and head down. I notice all the crypto shills and social media, which unfortunately by default I kind of need to pay attention to just from a risk manager and a trader perspective, portfolio manager game that I play. I got to really kind of pay attention to it. So, but it's been very, very quiet. I think a lot of them are trying to just prayer and hope that this whole 30-ish area holds, or we're going to be just flushing down further. And there's clues in crypto because it's happening to a lot of the biggest coins out there. I would say doesn't look as good for Ethereum. Again, just daily chart analysis, that's all. $18.40. It's the center line, is it right? Let's look at the data. $18.67. So if we're looking at aggregated volume in the whole period of time, it's been in this upper range from last year's lower range. Look at how that center line's just holding it. You're going to want to pay attention if you are a E-based coin trader, this whole 1750-ish area. Probably the line in the sand, could be the edge of the cliff. What else? Did gold, did some coinage. What am I missing? I think we've covered everything, right? For the question I just got on my FX book, do make sure if you're hooking one up, which is, in my opinion, probably top 3 in terms of analytical risk management factors, I would mandate anybody that traded for me to have analysis set up on. The great thing about my FX book is it's completely third party. We have no control over anything, which is very rare in trading, that you have a good third party. They may not be the most responsive people to requests to, because it's difficult in some cases when you're setting up an FX book to make sure you get 2 green check marks, which is fully verified in terms of the software's ability. Do keep in mind it just is looking in to the trades your brokerage account from an investor only perspective, not a trader. That's why the passwords can be different if you want. Okay, so keep that in mind as you're going into that. There's lots of great tutorials out there on how to hook up a MyFX book. I think it is one of the single best ways. I know that just understanding many of the betas that I've been in of our software that's coming out, some of the newer stuff, I may not as being as active in the betas as I am with the current one. But you know, a big thing is anybody that comes to me, I get a question from one of the participants in the group the other day, and he didn't have a double green check mark FX book to give me, which is rule number 1 with me if you're going to ask any questions about or want me to verify any of the analytical data in there. And keep in mind that you can lock a lot of stuff up. You know, you don't have to show people your balances. I mean, they'll know whether it's live or demo, but you don't have to show them your balances. You can hide your trades, you know, and all that. You can take off and on all of those locks if you want. The more locks you put on, the less data we get, though, right? The less data that anybody that's evaluating the performance in your account. So whenever I get a link to validate or error, you know, 95% of the time, they don't have the settings right. I would absolutely probably bet that that percentage is higher than that. So before you have any problems, make sure you're getting the settings correctly, which I know the developers go over ad nauseum in their weekly calls. The manual trading, the only manual trading software we have out there is Arrow right now. We'll have more coming down the pike in other areas of asset classes to trade, but for now, I mean, those guys in the Arrow room, they're killing it. And hats off to freaking Cash, Nate, Dante, all of Jackie. I mean, those guys are going real well in that trade room. And I think it's a great basis for starting your trading career. And a lot of people say, well, you know, I don't have the time and all that. And, you know, if I said to you, you know, would you make the time to make $1 million a year? And the vast majority of people will all say, well, hell yeah, I'd make the time. Okay. So that's how much you can make if you're a really, really good trader. Millions. So I think I'm going to bring a couple of issues, by the way. They don't print it anymore, but I'm going to bring a couple of issues to Orlando with me if you guys want to see them. It was a magazine that was printed about 6 years ago called Modern Trader. It was produced by Euro PLC, which is the same guys that produce Seeking Alpha, an institutional investor. So it's a great magazine from the standpoint of just understanding institutional traders. And they'd always have a list each year called the top 30 under 30 or the top 40 under 40. And the vast majority of people to make this list, you know, had to earn 7 figures or more a year trading for either, you know, some bucket shop or some prop shop or a hedge fund or some sort of, you know, whatever outfit. But I mean, these numbers are real. It isn't just a bunch of bullshit that I'm making up on this call. So for validation and more of a motivational from a big numbers perspective, you know, I've had the opportunity to meet a few of these people, and, you know, they don't have Twitter accounts, right? They care less about Instagram. They're just interested in trading. Many of them have won the U.S. investing championship and so forth. So I'll dig a little further into that down the road if there's any interest, because I think a good motivator in this whole biz is understanding that even though you want to be successful at trading Forex, I think you should be successful trading all kinds of asset classes, right? Commodities, equities, stocks, essentially, right? Options, even futures if you want to go deeper, right? So I'll leave it with that. Everybody have a good weekend. Any questions, you know, let me know. Start putting the list together if you need them, and ask away. You know, the questions that go unasked, go unanswered. With that being said, everybody have a great week. Get your tickets, because I know they're running out fast for July. If you can get into the U.S., and a lot of people can't, which kind of sucks. But if you can get into the U.S., we'd love to see you in Orlando at the end of July, guys. Ride the wave. Have a great week.